9:33. Boom. We are alive, ladies and gentlemen. Thank you for joining us today. Really appreciate all the support. We've got a fun episode. I guess happy 4th of July to all the American United States citizens out there. Happy 4th of July. When you're lighting your fireworks off, make sure you're not somewhere super dry. But have a good time exploding things. I think that's an important part. Just a quick side note before we jump into the crypto markets here. I want to talk about, I lived in Guatemala for a long time. And every Christmas and New Year's, the Guatemalan people would spend more money on fireworks than they did for healthcare that entire year. So I thought it was fascinating. People are such an interesting species. So we are actually live on YouTube, Rumble, and Twitter all at the same time today. Bitcoin's dropped below 57,000. We're going to just go pretty mellow. Spent almost a nice hour here this morning with you guys, drinking my little coffee and crypto session. So, boom, we fell and pierced through the 200-day moving average. The last video we did, we talked about how if we couldn't get above the EMA bands here with this run-up that was taking place, that we were going to come down, and we did. Now, I made a mistake. First off, back here, if you're watching any of the videos or you're from the private newsletter, I was bearish. I said, look, we've come up so high, so fast. We should just be bearish in here in general. But we hit this moment, and this kind of confused me for a few reasons. Not all the assets were confusing. Some of them were more clearly in distribution early. But Bitcoin and TON specifically confused me. So I wanted to go over that today. Addressing our mistakes is always helpful. So I was bearish leading up to this. So I was telling everyone, be very defensive with profits, be very defensive with profits here. And in this moment after this and this retest of the EMA bands here, I basically switched my bias back to bullish, which was incorrect. Clearly it was correct for a moment, but I usually want to be right longer than just how many days was this? Yeah, 24 days. Usually if I'm right about something, I would choose to be right about it longer than 24 days. 24 days is a very short period of time to be correct about something. So I always try to have longer horizons on what it is I'm doing. One of the reasons why is just you get better results. I'm not much of a short-term trader, but yeah, I just felt I wanted to go over this specifically because switching my bias from bullish to bearish and then back to bullish again definitely was a mistake. Although I think the defensive with profits idea still kind of rang true for many people, and some of you did, some of you didn't. I had some stop losses that took me out, but nonetheless, we learn our lesson. So what's the lesson? Well, in the first part of the sentiment, the reason why we are so bullish is because we were very bullish on excess deaths all the way since December 22. All of my private newsletters go over the increase in excess deaths and the idea when there is blood in the streets, you should be buying. Or when people are dying, you should be dying. If excess people are dying, you should be buying. It's kind of a sociopathic thing to think, but if you study the markets more and more, you start to recognize that for some reason, markets kind of act like a sociopath. We could make the argument that this is because we are. Oh no! What's happened here? What's happened? Oh, that was so strange. Sorry, I guess the Rumble stream for some reason had closed off the video. Sorry about that. I wonder what was going on there. Okay, so Rumble should be back up. Damn, that's twice now. I got to get the Rumble thing going. I like Rumble, by the way. I'm gonna try to make sure I post every single time on Rumble. I'm inadvertently proud of what they've done for the free speech community. So, sorry, I did fix it there. It should be working properly now. Yeah. Okay. Great. Working smoothly on Rumble. Let me know in the chat too. Thanks for spotting that one. Okay. So here we are, Bitcoin on the day chart. So yeah, I just want to go over this mistake. We were bullish ultimately. I think all the signals were kind of clear. I mentioned a few times too that I thought we were getting close to a top as more people started to recognize what was going wrong. The realization that there was more excess deaths, because back here in November 2020, when our newsletters were very heavily focused on excess mortality, which was rising in many countries around the world, it wasn't a hot topic. Most people weren't talking about it. As more people started to talk about it, I figured we were getting maybe closer to an intermediate top. Now, I still think Bitcoin is going to go higher, but I have also made arguments why that maybe no thing's price will ever go as high as it has now. So those are two very distinct differences. Part of the thing that's changed is my interpretation of what happens if excess deaths start to increase so dramatically. One of the things I haven't been able to make sense of yet is, 30% more people dying against the 5-year rolling average is actually a massive number, is very significant compared to where we were. So what does it mean if less people are going to be buying assets? One of the things that you often hear in this space specifically is the talk around retail starting to show up to the market space. And everyone's like, oh, retail is going to show up. And that's generally what happens is the retail market gets sold off and into by the large whales and institutions who have been accumulating, which is why there's always kind of the joke, like, you don't want to get retailed or whatever. And I think what's important to understand there is that if there are less people that are retail, which I think it is, and again, I made the argument yesterday on my previous video too, that the more shots you took, probably the more retail you are, because you're extraordinarily gullible at that point and you can be sold anything. So that's like peak retail, right? If you can be sold anything with clearly no good data, that's peak retail. That's what like all the meme coins get sold off into. And there were some other signs that we were like near or at an interim top too, which is also like the celebrities creating tokens and just this mad dash of all these people who had sold celebrity meme coins in the previous market cycle coming back. So again, this means that if more people are dying, and the likelihood that those that are dying are retail, retail might have already been here and showed up all the way, or we're going to have a last gasp of retail. Now, one of the conflicting factors is actually the S&P 500, which is at new all-time highs again this week, peaking outside of the previous box that it had dropped into. Now, we hadn't seen this this type of shift, I think, too, really comes from big players in the ecosystem. The idea that you will own nothing and be happy, I think, is also coming from this. That one of the big changes in the way you inflate a market without causing hyperinflation, I think, took foot. Whereas in the early 1900s with the Weimar Republic, it was actually very difficult to produce a lot of goods. Where nowadays it's significantly easier to produce a very large amount of something and distribute it, much easier than it was in the 1900s. So hyperinflation, which is generally where consumers are feeling the increase of the price index of, like, let's say, our morning cup of coffee, or the sugar that we put in our coffee, or the honey, or the maple syrup, whatever it might be. Those start to increase because they're general consumer products where there's only so many people that are buying super yachts, and the price inflation in those assets is not as dramatic. It's also not measured. The S&P 500, for instance, is not measured in the consumer price index, but it represents inflation. So the asset itself moving up, especially the S&P 500 being into new clear into new all-time highs again. Now, on the larger time frame here, on the weekly, we are for the first time seeing bearish divergence. The MACD volume is quite low as well. So we could be getting near a top. I was expecting I thought we were going to get a bigger retracement here. And again, this is why I was slightly confused. And I think what I got wrong was let's go back to May 1st when I switched my bias. So May 1st here represents what was effectively the spring, or what I thought was the spring for Bitcoin. And this is when I kind of first found TON, and there was a nice falling wedge here that took place into this breakout and what appeared to be a reaccumulation moving into the back of the box. So I thought we were going to get an SOS and a breakout here. And we did from May 1st, even to where we are today, we jumped up 50% for TON and upwards of 70%. So TON kind of confused me because the other assets their spring wasn't as clear. So I was kind of using Bitcoin and TON as I'm like, oh, look at this massive signature volume exchange, and that which is normally representative of spring. And again, why I've said so many times, when you get into your second reaccumulation or your third reaccumulation, it's almost better just to assume that it's going to be distribution to some degree and be very defensive with profits, because even though this looked like a spring, a high, like a low volume spring accumulation, and then enough demand coming in, the one thing I didn't take back to notice is that we actually never overcame the demand bar of the downside here, which is what you'd like to, what I probably should have been more interested in finding here was the volume signature. So if I could go back and correct myself about what I got wrong, it was that we did not meet a demand signature that was similar to the sell signature in the spring. And that's what I thought it looked like we were getting, because we instantly, for those of you that are new to the Wyckoff methodology, a lot of it's based off volume and supply signatures. And down here, this initial spring signature was bought up so quickly, and we recovered with less demand, which is good. But it was this next part that I messed up on, which is this next bout of demand should have increased as well, equal to that of the distribution demand. So yeah, anyways, I just wanted to kind of retrospectively look at what I think I got wrong, or the mistake that I made there, because it's always good to try to go back and reiterate what went wrong during this process, because I think we got a bunch of things right, especially leading up to this moment. We pretty much got everything right, and I could have been right here too had I just maintained the idea that we've seen two reaccumulations. We can switch to distribution even if it's only temporary distribution, and that's what we saw with let's go back here to 2020 with Avalanche. So with Avalanche here, we actually saw two, although it's not on this because we don't have enough data here. We actually saw two reaccumulation bars take place and then distribution. So here, thinking that it's going to be reaccumulation is just kind of a fool's game. It's better to lean in distribution. And I think from now on, I'm going to edit my strategy to do just that. If I've seen two reaccumulations, I'm just going to assume the next is distribution, and you should be mostly out of your position. Now, the important thing to remember is that what came next was actually a much smaller reaccumulation bar. So many of you remember this because I pulled in like a nice $100,000 trade with this in 2020. That was quite fun, and we did it in the group chat together. Where's my my parallel bars? There we go. So we were watching this bottom reaccumulation bar take place in early 2020. So after distribution came a form of reaccumulation before that final market cycle top out came into play. So that might be what we're witnessing now, is that we see the breakouts, we move into some type of accumulation, and look, this still could be basically, we could see a return to the top of the box here really quickly. It's not clear that this is distribution yet either, I don't think. So we still may find that Bitcoin turns around and comes back above, but it's likely that one of two things are going to happen here. Now that we've breached this point already, either we hit a bit of a spring here, we clip down all the way to 51,000 and we move back up. We could come all the way down to 48,000 and then still move back up to become bullish. But it's just going to be a stepping stone process from now on, because if we come down and can't get back above these EMA bands, multiple times, we're just going to have to assume that we're going to go lower every time until that changes. So we're going to be looking for switches in the EMA bands, basically. And the EMA bands in the weekly are around 43,000. And there's no real support, like I said, back up until that 30,000 points. So there's a big magnet that's trying to draw us down to liquidate those $30,000 plus players. I could actually do some of that now. We could take a look at some of the liquidation data to see if the we are out of the woods on that one. So what I'm going to do here is roll over. Let's go to the 6-month chart. Just loading here on some CoinGlass data. Okay, actually going to need even further now. We're going to have to go 1 year out. Okay, yeah. So here's the year-long data. This goes back to basically when the bull market started, when we started screaming the loudest about this process. And I think this gives a really good image. So right now, you can see the majority of the longs are placed between $26,000 and $36,000. You know, and maybe $22.95 billion in leverage positions since $34,000. So right now, the market's going to act as a magnet to try to get rid of that, because that's all unhealthy, non-spot buying. And this is what I said first, and this is what sometimes we'll be right the first time and get confused by the market. So when we are here at around the $65,000, I was saying, look, there's all this liquidation, magnetism down here. We could get sucked down to that level. And that's a kind of a crazy idea. It could happen. But again, this is why just being defensive, like I'm basically not in position right now. I'm not doing anything. I don't know what's happening right now. It's the best way to say it. I don't know exactly what's happening. I wouldn't be super bullish this high up though either, unless you're playing on shorter time frames. And again, this is where I think it looks interesting again, is that we're basically at the bottom of the range for Bitcoin. So usually we try to it's going to try to get itself back up to the top of the bands at least one more time here, something like 64, 65,000. And if not, it's just going to push lower. The next point of control is around $40,000 for where all the ETF buying started to take place to begin with. And that's what you might see, is that this just pushes us down all the way back down to all the big initial players of the ETF buyer, those who are smarter, who are going to take the profits all the way back down and squeeze out every last percentage basis point of growth that they can to get us back to this point of control. And then we either move up or retest this area and then come back down lower. Or again, there's variations here where we could just back test this and come back up higher. See just a slightly lower spring to 52,000 before moving back up. And again, this is why these trading ranges are so difficult. At the top of a reaccumulation range, it's better just to be bearish. From now on out, if we're in a second reaccumulation after long term, I'm just going to assume that the next steps are distribution, because it's too difficult otherwise, I think, to try to measure, especially when there's so much greed in the ecosystem. And like I said, I got turned around here in my footing because of this spring. So nonetheless, where does that bring us to next? Well, yeah, with the S&P 500, we're starting to move into oversold territory on the weekly. We're seeing some diminishing returns. But right now, the stochastic RSI is totally reset. So it could go higher. And this is another indicator I think that we need to keep reminding ourselves of, is that if all the big players here are buying, a lot of what we could be seeing right now is mostly minor capitulation. And this could just be leading into, again, a dramatically big reaccumulation. But even still, our thesis would hold the same, is at the top of what appears to be a reaccumulation bar, after you've had two reaccumulations, it's just better to assume it's going to be some type of distribution, or at least volatile enough it's not worth being in a position, because you're talking about 20% volatility to the downside still, or at least, again, reducing the risk of your portfolio and maximizing or at least securing profits to some degree, which is why the stop losses are kind of a great one in this position. You just go, okay, I'm out. What's next? But I wanted to look at the minor capitulation, because this has always been a great indicator. Again, we'll go back here and I'll put it on the daily. So here's where I started to get really bullish in October 2023. Oh, yeah. No, sorry. Wow. Yeah, it took here, January 2023, when it was clear we had jumped above and everything had switched. Now, in the markets, it's not as clear. You'd think, well, why would you not want to enter in these red positions? And that's also a great way to look at it. Generally, as you enter into minor capitulation, that's a great way to enter. Because here, these reaccumulations that we saw within the ecosystem, again, these are what I'm drawing out here is just a shorthand of the reaccumulation bars that were effectively taking place during the Bitcoin upcycle most recently. And right now, we're just in heavy minor capitulation. So entering in the red was also a great way to go in the past. It's hard to see some of the data because I've got so much on the screen right here. I apologize. I can make this a little smaller. But you can see that pretty much anytime you were in the red, you were seeing great entry points for Bitcoin, right? So this is also saying, technically speaking, this is a great entry point for Bitcoin because you're starting to reach oversold, like heavy selling by the miners, which has generally been the largest points of capitulation within the market, right? Now, not all the time, obviously, right? Technically, if you had, I know it's kind of obscured in the data, but if you had bought all the way over here and then not sold during the green, right? So I guess this is also the important point is that the green is for selling, the red is for buying. Okay, well, I lost internet for a sec, so I'm not sure if it's all still running. Wow. That's impressive. Okay. So my camera's not going to show up, or I could switch it, I guess. I could switch my camera. The camera's not going to show up. I guess I'm a no-face channel today. We lost power in Medellin. I love it. No matter where I go in the world, I'm just losing power all the time. The power. I bet you the power's probably like never gone out here in Medellin. It's probably like one of the very first times that's happened. Oh, that's funny. Probably like one of the very first times that's happened. Oh, that's funny. Okay. Let me know if we're still live. I love how the technical difficulties are just impossible for me to escape. Well, I guess we'll leave it at that. Thank you all for joining us. I'm running off cell phone data and I have no camera, so I'm just going to pop it off. I wanted to say thank you all, though, for joining today. And we'll try it again when we land back in Costa Rica in the next little bit. Ciao.